Welcome to the new weekly outlook. This one's going to be a little bit shorter because we don't have a lot of fundamental articles to go over. A quick recap, though, when it comes to macro fundamentals and geopolitics, we saw that Prime Minister Boris Johnson from the UK stepped down from his position as a prime minister. He also said that he will not be making further decisions when it comes to monetary policies or anything with the economy, really, and he's going to leave that up to the next person who comes in as a prime minister. For Japan, we saw that the prime minister of Japan also got assassinated and he passed away, unfortunately, over the weekend. And so now they are looking for a new leader. However, Bank of Japan has said that they are going to continue their current monetary policies, which is loose accommodative monetary policies and the low interest rates, and they're going to keep it that way. Now, moving on to the economic calendar, we saw on Friday, last week we were looking towards NFP, and on Friday we saw NFP come out, which was better than what we had forecasted, but less than previous. So we were expecting a dip, and the dip definitely happened here, but it was much better than what we had forecasted. This is something similar to what we had seen back in June as well, where we were forecasting a massive drop, but that didn't really happen. We got a pretty good number coming out compared to the forecast, which was still less than the previous. And that was in support of, again, increased interest rates. So when the interest rates were released last month, we did see an aggressive approach. So is this something similar to what we can see at the end of July when the US will be releasing their interest rates, maybe an aggressive approach like a 75 basis point hike again, or can we see a half basis point hike or a quarter basis point hike? But we do know for sure that they are going to continue to increase interest rates. On Sunday from Japan, we had the upper house elections, and then we had the Bank of Japan's governor speaking. Rest of the Asian session was quite easy on Sunday. And then on Monday, we have Bank of England governor speaking, but other than that, it was a lot of low impact news today. So again, in Asian session, there's not much happening. As we continue down into Tuesday, really the attention is going to be more towards the interest rates and Asian session if you're trading the New Zealand dollar. But other than that, you have a Bank of England governor speaking, but we don't have a lot of high impact or medium impact news coming out otherwise in London session or even in New York session. Now moving into pre-London session, we have a lot of GBP news coming out, so that could be one thing to kind of pay attention to if you're trading GBP USD, GBP JPY, or any pound pair in general. Wednesday is really when things start to pick up a little bit because in the New York session, we have CPI coming out. Again, this is going to be very important. This is inflation from the consumer's perspective. We did see a huge increase last month, and again, that's where the aggressive interest rate hike also came from. So if we end up seeing, a 1.1 or 1.2 or anything higher than what we already had in the previous, then again, can we see another aggressive approach when it comes to interest rates? Then you have the Bank of Canada's interest rates coming out along with their press conference. As we continue down, you have the employment change from Australia along with the unemployment rate. And then on Thursday, quite an easy rest of London session, and then things start to pick up a little bit in New York session with inflation from the producer's perspective coming out and unemployment claims, which is what we get every Thursday anyways. So we're getting a lot of inflation news this week, which is going to be very important in that decision making of increasing interest rates or not, because again, the dual mandate is price stability and maximum employment. Then going on to Friday, we end off with the retail sales, which is, again, an important factor in the decision making. And then we have the consumer sentiment and inflation expectations. Now let's go ahead and move on to the technical side. So we're going to start off with the monthly time frame here on GJ. I'm going to mark off the current resistance, which is at that 165 level, and we can adjust that as we drop down to lower time frames. And then I'm going to mark off the current support also, which is right around this area right here. And this is that 161,800 area. And that is also the previous resistance. So if you look to the left, you want to see if price has reacted here previously, and that's how you'll know if it's a strong level or not. So when we look at this 165 and 161,800 level, we start to see that 165 price has respected that as resistance. And then also here as consolidation resistance, it respected as support. And then we saw a massive push up from there. And then we saw some more price action right into that area. Price rejected into this 161,800 as a resistance. And then we saw a nice sell-off happening. Price pushed right back up above this area, tapped right into it as a support, and then we saw a nice bullish push up, which was the last high that price has really created here. As it came back down, as Brexit was being introduced, we start to see a little bit of more resistance being formed at that 161,800 before a massive drop back down into this 130 range. And then we push back up, and that's kind of where we're sitting around at the moment. So a couple of things to watch out for when it comes to fundamentals and catalysts in general is that in order for price to continue pushing bullish from here above 165, we need to see some strength in the pound. So again, that could happen from the political side. So as UK finds its new leader, as they continue to increase interest rates, but the economic conditions are there as well to support the push up in the currency, or we start to see the yen getting even weaker. So right now we already know that they're keeping an accommodative monetary stance. They're still in those negative interest rates. They don't have a leader as well, but if there's a catalyst that weakens the yen even more, then we can start to see GJ pushing up above 165. In order for us to continue pushing below 161,800 and come back and revisit into this 156 range in general, we would need to see the yen getting stronger in some form or the pound getting even weaker. Other than that, we could just end up seeing consolidation if really we don't get any of those catalysts. Drop down to the weekly time frame, same thing. Look to the left and see how price has reacted here previously. So we do see resistance being formed here, fake outs, price pushes right back down, and then taps right into that area, pushes right back down here again. As price is pushing up, it was a nice little break and retest. We've come back and we've made massive bottom wick rejections right into this 161,800 area in general in the last couple of weeks. So is that pretty much where we're headed to come back and fill this wick fills right here? What you can do is end up creating a zone if you would like, but in order for your zone for price to come back and tap into the zone, we would first need to break below that 161,800. So that's the first target for us when it comes for any sells. If we're looking for any buys, then we would need this weekly candle to flip back up bullish and then continue pushing back up into 165 range. You could create another zone there. I'm not going to do that, and I'm also going to remove this one just so we can use zones as we drop down to lower time frames and really narrow in the areas where we can look for trade opportunities. So for example, currently the daily time frame is holding on to a resistance right into this level here. Take a look at how price has reacted here previously. We have seen price hold on to this as a break and retest resistance, and then a nice push up from there. Another resistance being formed here, a little bit of consolidation, and finally we come back and create a new low, and then price pushes back up. We kind of just held on to this area, reacted to it, another break and retest support, and that's the current resistance that price is holding on to. So last daily candle broke the high, came back and flipped bearish and closed bearish. So what I want to see with the current daily candle is, can we hold on to that resistance, probably end up making a break and retest on the 4-hour time frame and give us a top wick here on the daily time frame and then continue pushing down. If that happens, then we can first target into this area first as like a TP, as a partial or anything like that. Let your trades run down to 161,800, but also remember that off the weekly time frame, price does react to that 161,800 area multiple times, whether it's candle closes or wick rejections. So that's one area that we want to be careful of, but ultimately for sells, we want to target some of these wick fills. But the first target is again going to be at this level right here. But if price ends up making a bottom wick and flipping back up bullish, then we can look for buys. Anything in this zone, that's essentially a no trade range. Any buys have to be above the zone. Any sells will have to be below this zone here. Go on to the 4-hour time frame. So here again, resistance, a nice little pullback, and then continued push up. We got a fake out, sell right back into that 161,800 resistance, and then sell right back into that 161,800 here as well. And we've seen price pretty much, giving us some nice wick rejections and whatnot at this level. So with the current 4-hour candle, what we want to see is, can price break above into the zone and then close above the zone, give us a break and retest and continue back up bullish for any buy opportunities. That would maintain the short-term bullish structure that price is forming, or is it only going to make a top wick, come back down and flip and break below this little level right here? If that happens, then we have sell opportunities coming back down into 161,800. Ultimately, anything in between is really what I would stay out of in Asian session or even in London session, but anything above this, we want to look for those clean entries. Drop down to the hourly time frame. This is the reason why we want to stay out of this range. Look at all that consolidation happening here on the hourly time frame. So we need to see some clean break and retest here, and then look for your entries to the upside or back down for any sells. Now let's go on to gold. Same thing. Let's start off with the monthly time frame. We're starting to see a lot of bearish pressure here, which is a good thing. So that means we can look for some clean sells going down to 1680 ultimately. So this is your 1755 area here that price held onto as support. You look to the left, price has reacted here as resistance previously, as you can see right here, even at this level, and all of this was support into all of this. And then as price is starting to break below this, we're starting to see some nice sell opportunities as price continues back down bearish. Now what we can do is mark off this 1680. 1680 is again these wick fills right here. As price continues back down bearish, that's pretty much what we're targeting. Let's go ahead and drop down to the weekly time frame here now. So on the weekly time frame, you can create a zone if you would like. What we want to see here, best case scenario, is some sort of rejection right into 1755 as a resistance, and then continue breaking down below this. As we can see, essentially price has already broken and it's testing the previous weekly lows here. That's exactly what we want to see. So this is at 1730 area. And as price continues breaking below 1730, you got those clean sells coming all the way down to 1680, and there's really nothing stopping us at the moment. Let's go on to the daily time frame. So on the daily time frame, we've had a nice sell-off, a retest, and a continuation down as we're breaking previous candle lows. That's exactly what we need. We need the current daily candle to continue breaking these lows, breaking below the 1730, 1731 range, and those are clean swing trade opportunities to the downside. So that means that we can still take advantage of any scalps, but we have seen price react off of some of these areas previously, and we want to make sure that we're not getting stuck in any of these ranges again. Go down to the 4-hour time frame, you see a little bit of consolidation. So this is extra confirmation that we need to wait for price to break out of these areas, close out of these areas, and then we can look for any continued sell or buy opportunities. So when 4 hours consolidating like this, I don't usually drop down to lower time frames. So we're pretty much going to wait and wait for these candles to close out of this direction one way or another. All right, so same thing on US30. We're going to start off on the monthly time frame. We're holding on to a nice support right here, which is at 30,700 area. And I'm also going to mark off the current top wick right here. And that's that 31,500 level. We go on to the weekly time frame. We see how price has been holding on to a nice resistance here. The current weekly candle has made a bottom wick rejection. It's still bearish here, but we are in a zone of consolidation. We have seen price consolidating here previously as well, and that's quite similar to what price has been doing for the last 2-3 weeks. So what we want to see here is, can price end up holding onto the current resistance and then pushing back down bearish? For that to happen, we would need price to break this little minor support and then continue pushing down towards 30,700. Or are we going to just end up making a bottom wick rejection here, push back up a little bit higher, and come back and retest probably into some of these wick rejections that we have had at this level here previously. Remember that this is only the second week into the new quarter, so we do want to give price enough room to make any wick rejections and kind of find its direction. Drop down to the daily time frame. Price came up in the last couple of days, rejected that 31,500 area perfectly, and then last daily candle closed bearish, breaking the previous daily low, and that's exactly what we needed. If you want to narrow your zone in even more, I would say for any sell opportunities, you want to make sure that price continues breaking below the zone. It's pretty much at this candle body low right here. And then as price continues pushing down, then you can target this 30,700 area as an ultimate target. Drop down to the 4-hour time frame. So at the 4-hour time frame, we saw a nice push up, a little bit of consolidation, price push down. We start to see some exhaustion here, a nice lower retracement to respect that consolidation support as a new resistance. And so with the current 4-hour candle, what we definitely want to see is some top wick rejections and price successfully break the previous 4-hour low here. If that does not happen, then we could end up consolidating out here, because remember, the previous 4-hour candle showed us already a lot of uncertainty as it broke the highs and the lows. So we want to make sure that we're waiting for confirmations. If you're looking for any buys, wait for price to clear out of this zone here and then continue pushing up bullish. You're targeting the previous 4-hour wick high, and then after that, the 31,500 area. If price fails to do that, and it ranges in the zone here, then you don't really have a trade opportunity. So exactly on the hourly time frame, all this consolidation, you want to kind of stay away from it. If you want, you can adjust the zone. Just remember that this is off the daily time frame. So if you want, you can either adjust the zone or create another zone. What I'm going to do is create another zone here. And I would say anything between of this is all no trade range. Stay out of the consolidation, wait for the clean candle closes, and then look for your trade opportunity. So that's it for this week. If you guys have any questions, feel free to reach out at any time. But yeah, this weekly outlook was a lot shorter than the previous one. Remember that just because we didn't go over some articles today doesn't mean that, there aren't any articles to watch out for in the remaining of the week. So keep your eyes out, especially for any geopolitical news or anything like that when it comes to the UK or Japan. Again, my Instagram is at SharmaFX. If you guys have any questions, that's the fastest way to get a response. Have a great week, everybody.